Greetings to everyone. In this video, we are going to learn comparative income statement. Comparative income statement, one of the simplest method of financial statement analysis, but it's a powerful tool to compare how each items are increased compared to previous year. The following steps are to be made. Step number 1, excluding particular column, you have 4 columns. The second column is previous year, and the third column is current year, and the fourth one is changes, absolute change, which is expressed in terms of rupees, and finally change percentage. And we have to fill all the columns. And step number 2, you find out the absolute change, which is expressed in terms of rupees. It's nothing but current year value minus previous year value. And the third step is we have to find out change percentage. That is the third column. What is the change divided by the base year value or current previous year value? That will give you the percentage. And one important note is that we have to calculate row wise, not column wise. So next we will see a small problem here. Yeah, this is the format. As I said, particular column, then note number 31st, that is previous year, 31st March 2015 and 31st March 2016. 16 is a current year, 15 is a previous year, and absolute change, it's increase or decrease column, and the fourth column is B minus A, that is 16 minus 15, current year minus previous year value, and the percentage change, decrease or increase percentages, the absolute change divided by previous year value. And this is a format, and this is a format for new format actually, as per the Companies Act 2013. Revenue from operations, which means sales, and other incomes such as non-operating incomes. And third one is when you add these two, you get total revenue. And the fourth, we have to deduct all the expenses. The first one is cost of materials consumed, and purchase of stock in trade, changes in inventory, that is opening finished stock of finished goods, that is the difference between opening stock and closing stock, work in progress and stock in trade, employee benefit paid expenses, financial cost, depreciation and amortization, other expenses. Then we have to, from the total revenue, we have to deduct total expenses. That will give us profit before tax. And when we deduct tax, then that will give us profit after tax. So this is a simple format we have to follow. And supposing if the books, if operating expenses are given, we can go for sales minus operating expenses equal to gross profit minus tax will give us profit after tax. So from the information we have to find out, we have to prepare comparative statement of income. So revenue from operation 16 and 15 is given. Cost of material consumed, which is in percentage of revenue from operation, out of 20, 60% is cost of material consumed, and 2015 70% of the revenue from operation. Then employee benefit ratio 2,50,000, it is 1 lakh, and income tax rate is 40. So here 16 and 15 is given, and when we work out the sum, we have to rewrite it as 2015 and the next column is 2016, so that we will see the change. So same is rewritten as per the format. So revenue from operation for 2015 it is 15 lakhs, and for 2016 it is 20 lakhs. So absolute change is 20 lakhs minus 2 lakh, 20 lakhs minus 15 lakhs will give us a positive figure of 5 lakhs. And the last column is 5 lakh divided by base year value 15 lakhs. So 5 lakhs divided by 15 lakhs into 100 equal to 33.33 percentage. And less expenses. Cost of materials consumed, it is expressed in terms of percentage, 60 percentage for 2016, and for 2015 it is 70 percentage. So when we calculate to the value, it's getting somewhere around 10 lakh 50,000, and for 2016 12 lakhs. Therefore, there is an increase, and the change decrease or increase or decrease absolute change is 1 lakh 50,000. So 12 lakh minus 10 lakh 50,000, which will give us 1 lakh 50,000. Now the percentage is 1 lakh 50,000 divided by 10 lakh 50,000 into 100, 14.29. Then employee benefit expenses, it's like salary, other employee related expenses. For the first year, that is 2015, it is 1 lakh, and for 2016 it is 2 lakh 50,000. Therefore, it is increased by 1 lakh 50,000. 2 lakh 50,000 minus 1 lakh, 1 lakh 50,000 is an absolute change. And again, percentage of change can be 1 lakh 50,000 divided by 1 lakh into 100, 1 lakh 150 percentage. That is, employee benefit expenses have increased by 150 percentage. First year it is 1 lakh, but second year it is 1 lakh 50,000. Therefore, this change is 150 percentage. And total expenses 11 lakh 50,000 for the first year. For 2016 it is 14 lakh 50,000. Then for the absolute change is 14 lakh 50,000 minus 11 lakh 50,000, which gives us the value of 3 lakhs. Now again, for total expenses, how much it is increased? It should not be calculated like column wise. So 3 lakh divided by 11 lakh 50,000 into 100, the total expenses increased by 26.09 percentage. And now the result, revenue from operation for the first year is 15 lakh, whereas total expenses for the year 2015 is 11 lakh 50,000. Therefore, it's a profit, and this profit is before tax. Therefore, profit before tax is 3 lakh 50,000 for the 2015 and 5 lakh 50,000 for the 2016. And again, profit before tax is increased by 2 lakh. Therefore, 5 lakh 50,000 minus 3 lakh 50,000, a positive figure of 2 lakhs. And what is the value of this percentage change? 2 lakh divided by 3 lakh 50,000 into 100, 57.14. And less tax of 40%. Therefore, we have to calculate tax of 40% on profit before tax. Therefore, 3 lakh 50,000 into 40 by 100, you get 1 lakh 40,000 for the first year. And the second year, tax comes around 2 lakh 50,000. That is 5 lakh 50,000 into 40 by 100, you get 2 lakh 20,000. And the absolute change is 2 lakh 20,000 minus 1 lakh 40,000 equals to 80,000. Again, the last column, 80,000 divided by 1 lakh 40,000 into 100, 57.14. And profit before tax, less tax, is profit after tax. 3 lakh 50,000 minus 1 lakh 40,000 equals to 2 lakh 10,000. And the same for 2016 is 3 lakh 20,000. And Profit after tax has increased by 1,20,000 in terms of rupees. That is 3,30,000 minus 2,10,000 equals to 1,20,000. Again, the percentage change 1,20,000 divided by 2,10,000 into 100 equals to 57.14. So in this we can see some conclusion. So the expenses have increased by 26 percentage. Total revenue have increased by 33.3 percentage. And final result is that net profit after tax increased by 57.14 when compared to the first year. So this is a percentage of change from 2015 to 2016. Therefore, this is a good sign that the profitability of the concern is good. And thank you for watching.